Hi everyone, 6th of May 2017. Once again, we are into a week end where you have an event. So, event weeks are always awkward. But before I discuss that, let me just quickly first take us into the Nifty chart. And this is probably a chart I've discussed for a while. And the key thing I've discussed, I think, in some of my videos and posts which are online on Facebook, Twitter, essentially these two trend lines, the Nifty has been between them all the way since March. Not much progress, but if you actually look at the mid cap, small cap of 500 BSE 500 index, it's pretty much more vertical upward. So there's this massive divergence between these two segments. But essentially, the Nifty's remained within this, and so these are the two key levels that we're going to keep watching. One is, of course, down here at the lower end, which is closer to 91.20, 91.15, and then there is the upper end here, which is closer to 93.80. So I think those become the broad markers of where the index heads. We can keep debating as to whether it will eventually get past this side or that side. I of course have my opinion, which has pretty much been published, and I also wrote the long short report, lots of data points to back up what I was trying to say, and was also published in the in a discussion in 80. But of course that doesn't cover all the data points, and there are two more which occurred, I think, by Thursday of this week when the market was attempting to make this high again. There are two more meaningful extremes which I'll post on Monday. But in general, these are the levels to watch, and I think what will play on our mind Monday morning is going to be essentially whether the event in France is going to, take us beyond this mark, and is it really significant? So the thing with events, first of all, I must talk about is that events by themselves do not really lead to major market directional change. This is just a lesson that you learn from being around and watching it happen over and over again. Of course, we are all human, and I might myself may have succumbed to a couple of them. But in terms of the lesson that is learned, events essentially are part of a trend. They are never the creators. And what I mean by that, if you look at any event, you'll find that, say for example, the trend of the market is up, then probably the upward trend would continue, and any event that occurs within it would either aid it to continue further on the upside, or would be a knee-jerk reaction for a day or two. And our belief that the event would actually cause a trend change essentially is more our own mental weakness, or the way we get affected by the amount of news and noise that is really surrounding us. To take much of the very much recent examples, Brexit, it was supposed to be a major negative event, and it did have an impact on the market for a day. But eventually the market moved higher. So what I would really read into it is that the market trend was still up. Brexit was essentially an event that came in between, caused a knee-jerk reaction, and the market went on to do what it was doing. Our belief that the event would cause the market to turn around into a downtrend was essentially the misleading fact. And the same can be seen in the Trump event. In fact, our own market fell more for a month or two, essentially because of the negative sentiment effect of demonetization. But eventually, it moved higher. But what you might say is demonetization only made the downward trend that was already set up in our own market a little more worse. So essentially, it exaggerated the trend that was already in place. So it was not the cause behind the trend reversal, because our market essentially peaked in September. Now you can again argue that no, that's not the case. If demonetization did not happen, the market would not have gone down. But I think I've published my report for September, and anyone who's tracking market data would have seen at least one indicator, which is very easily can be judged. In fact, even that was published, and it was simply the FII index futures long positions. The index futures net long position of FIIs had reached the highest ever on record since the data started being captured by being published by NSE in 2011. So highest on record, 350,000 contracts net long. They've never been that long ever. And so it was an extreme in position and sentiment that caused that reversal, and that reversal went all the way into December. Demonetization, I would say, simply aided the final leg down in that move. But at the same time, for Western markets, Trump was supposed to have a negative effect, and it did for just one night as far as US is concerned, but the trend up continued after that. And so that's been the typical case. And so if you put it in that light, even Europe, I thought the European market was counting 5 waves, and it did sell off, but the post the French election, it moved even higher, which essentially is that the trend was still up, and I just have to record that, well, that opinion was wrong, that you had completed something. So this is where we are right now in counts that are still showing some room for extension on maybe a little more, not a lot more, a little more for European markets. I think the way I'm counting the extension is still be in a fifth wave, but we've just dipped it. We've not even dipped in a minor 4, and then we get a fifth up, and that completes the structure. Now, how would that happen? Will it happen on the back of a Le Pen win or a Macron win? And what kind of effect would it have? Now, if I look at our own market, if we are still within this broad range, which I just showed, if we are right up there after a Macron win, well, it doesn't change the structure of the market. And like I said, there are a lot of data points that can support a potential correction from there. So it doesn't change the opinion unless something changes in terms of the market structure. A spike up for a day does not change kind of extremes you get on certain data. At the same time, what is the trend? So you have several momentum indicators, some of the shorter term ones are rolling over on the daily and weekly charts this week. So there has been some signs of a trend change, and which is why to me that is important. At the same time, if there is a negative news, and that's something that nobody's really anticipating now, which means a Le Pen win, would it really be cause of this decline, or did we already have peaked here? Because it looks like we've already peaked here, and that would if such a thing happened, it would essentially be only a trend continuation. But just look at this event; it's pretty peculiar because irrespective of what impact it has, because for all you know, a Le Pen win has only a one-day impact, causes a correction, and then everything goes back to normal, just like it did after Brexit. But we wouldn't call it normal, but what we would call it is a process, because what we've noticed in each case is that whether it was Greece, Brexit, or let's see, in the case of France, that everything went into a process. So on the one hand, you have a trend. The people in Greece voted in an alternate party, Alexis Tsipras, and he fought for getting Greece out of the mess that it was in, but he was not able to, even when he came back to the parliament and everyone voted that he should actually ask for an exit. He finally went to the EU and came back empty-handed. So essentially, the vote of the public is clearly on one side, but the actions are not there, and that's the same thing we're noticing with Brexit as well. The vote is already there, but the actions are not. In fact, what they're trying to move towards is actions in the opposite direction or some middle way around it. And so would the same be the case with France as well? Is something we don't know, even in the case of a Le Pen win. But sentimentally, of course, it would have a short-term market reaction. Will it have a larger reaction? The people who believe in that news item doing so do believe that it would. Maybe it's an eventuality, but in the short term, the markets will do what they have to do. But yeah, I was saying there's a surprising data point, and that's that while there's so many polls saying that Macron will win, and just to highlight, if you just looked at the poll that occurred 2 weeks ago, essentially the difference between Le Pen and Macron was essentially not more than 2 percentage points. I mean, 21-23% odd variation between the votes that they got. But still, simply on that small little lead, the medias and the polls are all highlighting that, oh, he's way ahead. Who knows? So we really don't know if it's such a small difference, and if the polls are just, misleading right now, as many have been in the recent past. A small shift in the vote can easily shift the actual outcome that you end up seeing on Monday. So I guess anything is possible, given that it was such a narrow vote 2 weeks back, not going by what all the running polls are essentially saying right now in the media and the press. So one of the other highlights of this week was the depth to which we started getting a correction in the metals. Of course, I was writing about the metal indices, at least in stocks, seem some kind of retracement, but I've been positive on the medium-term trend, essentially expecting a larger degree X wave. So I've taken the yearly chart of CRB index, and essentially what I was trying to do was something like this. Now, on the yearly chart, you could very well see a three-way when complete, and we actually closed the year last year positive. But it's quite interesting. I just noted that we've actually not even gone above the low point that we made on the CRB index at point A. So we've really not gone beyond that. And in the next wave, I would have expected that to happen. So moving to a still lower degree chart, this is of course quarterly, and my expectation has been that you'd probably a counter trend move would at least be A, B, and C, similar to what we saw here. So the larger B wave was an ABC advance, and then we got this big decline, and we should probably see one more ABC advance if it's still an X wave. If not, it's something else. We would start marking it 1, 2, 3. But essentially, it looks like B is not complete. So I would have thought that B would complete probably as a double bottom, maybe in this very, very narrow range. And some of the metals have actually stopped falling, apart from steel, which came in the news with Chinese steel prices selling off. Other metals, the base metals, have already retraced pretty much. Like zinc has already done 38%, copper is already back to the 40-week average, and crude was the only one attempting to hang on, which is broken down this week. Maybe there's still more way to go, and the CRB index essentially reflects more of that. But I'm still thinking in terms of wave B, which means maybe it retraces more, if not a parallel line. Maybe it goes down to a 78-61% kind of retracement before you get the next move up. So you might continue to see pressure on the commodity markets for a while. But I would still look for signs that eventually you have that one more leg up. Now I've moved to a still higher time frame, the monthly time frame. So this remains the thought process at the back of the mind, but for the time being, like I said, that's one segment that's seeing meaningful pressure, and while that pressure remains, it's going to raise doubts as to what is happening in that segment, because some of the declines are pretty nasty. And among the more nasty charts that I ended up seeing this week was the one of the NCDX. Now, I asked a couple of questions because I've been writing about jeera and turmeric, and some of them just kept on falling. And so that pushed me to look at this, because we had a series of rallies on a couple of agro commodities. And while I turned bullish on the commodities, even before I turned bullish on the metals, I was actually more bullish on the agro and more looking at the international agro prices, which had fallen so much more than the domestic ones, that it looked like they would start a meaningful wave higher. And so in light of that, we did get a pretty decent rally in some items like sugar. But many of the others made good rallies, sold off time and again. And as we are actually seeing on this chart, those rallies essentially became a series of waves, whether a series of impulse waves or corrective, varies from chart to chart, whether you're looking at jeera, or you're looking at rapeseed, or you're looking at one of the others, maybe cotton. But essentially, at the end, I thought that these series, they can actually mark as 1, 2, 3, 4, 5. The only problem is they're overlapping, and in some cases, I thought maybe they're indicative of a leading structure, but maybe it's an ending structure, because here's rapeseed, for example. You have a trend line break for a pattern that's gone on for several years, and you can actually see 1, 2, 3, 4, 5 at a very or take the chart of kapas, and it was highlighted to me as a longer term triangle. I also wrote about it by one of my analysts, but just re-looking at it, when I connect these highs, I can actually end up with some kind of an ending structure on this chart on the right hand side. And then there's wheat. Again, this is something that I noted some time back, but I was trying to think of alternate structures, because some of these initial waves I was marking as 1, 2. But when I look at this quarterly chart, all the trend lines touching, the lower trend line breaking, raises some concern on the big picture as far as all these commodities are concerned. So essentially, the thought that came to my mind is the consolidation or correction that we saw into 2015 before this final burst took place would probably be a fourth, and then you saw a fifth in various charts. And so it was essentially looking like some fifth has started, but I thought the fifth would be a pretty large one because the previous waves in many commodities were pretty large, including the NCDX index itself. In fact, here's maize, pretty much interesting. Similar setup. You see this entire one structure, deep correction, this very expanding pattern, which gives you a feeling, because this is expanding, so it could be triangular. And while typically the fifth wave is a 3333 structure, a very rare case put out by EWI and some observations that you can get a 53535 in an ending structure, and so it is possible, but typically you see 3-3, and it varies depending on which commodity you're looking at. But essentially, you have a fifth with 5 waves inside it, some of them overlapping, contracting, extending. I mean, either contracting or expanding, but most cases I'm seeing an expansion. And so the thought, like I said, that a fourth and a fifth completed. And my wave count, like I said, for the NCDX index a couple of years back when I actually posted it, was essentially that of final fifth taking place. So let me quickly go back to that chart. And here it is, the NCDX index essentially has then done what I should say is 3, 4, and this is a fifth. The fifth ended up being, you may say truncated, but it's made a new high, but essentially it's a new high in an ending structure. And if that is complete, then we are looking at a meaningful correction to that. Typical is, of course, going back to fourth waves low. But what scares me is when you complete such a big structure, you do get a deeper either price-wise or time-wise bear market. And so it may be a long time before we really see a pickup in commodities again. And so the big question I'll get, I'm sure, from everyone is, what about all the other commodities? And so are global commodities looking like that? Not very clearly. So I wonder if there's a divergence, or whether we will eventually see global commodities show the same idea. The deflation thought, of course, always comes back after the big sell-off we've seen in the last couple of years in commodities. But then we've seen this recent pickup, which was definitely creating hope. In sugar also, if the wave count is still right, if it's 5 up and doing a 3 down, then once we complete 3 waves down in the domestic sugar prices, I'll probably relook at that as a case, because there can always be individual cases that are different from the entire picture. But most of the others, like I just showed you, all show potential fifths completing. And so the rest of the commodity pack may be very, very different from what maybe one individual case may end up doing, which we'll try to continue to watch and update. So I will be writing about it as and when more evidence shows up. But for the time being, this break in the commodity pack does not look good. So which is why I gave it pretty much importance and wrote a little more detailed note on it midweek. So here's a chart of maybe aluminium on the MCX. When you look at global charts of some of these metals, they've corrected a lot more than it appears on MCX, essentially because of the currency devaluation that we've seen in India. So the rupee has definitely kept metal prices much more elevated. So why have metal stocks not done so well? Essentially, it's been the problem of debt and leverage and capacity rather than price itself. And of course, some of them are exporters. So that may be a pressure point. But if you look at this, in fact, if I take these highs, then you're essentially in this cluster of trend lines of the highs for many of these commodities as well, which are important resistances from where we are selling off. So I wonder whether, I've marked some of them as 5-wave advances. We're going to retrace, is what I was thinking. The question is going to be what depth. Is it going to be something more than we thought out? So this weakness in commodities needs to be kept in mind. We need to wait for fresh, clear evidence of a bottom being put in place before we really look at a change in the tide. And therefore, I think the best for the time being, the long trade on this cycle is probably done. Similarly, here's a case for lead. I've been trying to mark this as a 5-wave advance, and the first 3 waves were pretty clear. The 5th wave essentially ended up being truncated, not making a new high. This is what I was thinking. but essentially it's not a great structure to have. And if you connect all the trend line of the highs, you're getting pretty close to that point, so we'll have to see how deep this can get. There are signs of a short-term bottom in some of these commodities that have fallen in 3 waves, and so maybe you get a retracement move, but less confidence of a complete turnaround right away is what I would think. Last but not the least, let me end today's discussion with a talk on the dollar. I think I've been among the few that have been trying to say that possibly the dollar peaked. EWS probably left that option open. They have started writing about this possibility, but in most cases they're saying this is not 5, but it's just 1 of 5. And I've written about reasons why I think it could be a fifth. Essentially, you've had an extended third wave. There's no reason to have an extended fifth. And of course, it's a 61-66% retracement of the previous bear market, then the 9-7 year cycle of the dollar. There's so many reasons that I can come up with. And so far, that's proving right. We've closed the 4th week down for the dollar. So that's an interesting situation to have. And with that, I'm moving to the daily chart. And on this daily chart, essentially, my thought was this is an impulsive decline. But of course, it's overlapping, so most probably leading. This one was pretty much more clear in both the case of the euro and the dollar index. 9 legs making up a clear impulse. This one did start as a 5-wave decline and paused, but this week in the last 2 days it has broken this low. Now, unless it's forming an expanded flat, which means this fall is just a false move and you'll still get a pullback, you'll probably move lower again, or else it's already started extending lower because it's broken the swing lows and you'll get a third wave move. Now, a lot of this might have to in the short term to do with, again, an event, which is the French election. We saw how this gap down over here, the 5th wave of this fall essentially occurred on the back of the news from the event. And well, like I said, event news can essentially extend a trend, and if this trend is already in force, any news that would cause it to continue would essentially just favor the trend that is already in place. Now, which form of reaction will you get? A pullback and then a decline, or a decline right away? I think it doesn't change the broader trend that the dollar is headed down. So I think that's the highlight. The reactions were, of course, a surprise because most would think, that if Europe really wants to weaken its currency, then why would a Macron win essentially cause it to get stronger? And then you'd think that, that means that there's not going to be any breakup. Well, there's no sign that, they're going to allow that to happen so far, despite the voting moving the other way. So who's really winning that fight? It's not clear. But on the charts, the dollar is clearly losing out to the trend, which is one of a weaker dollar and stronger currencies, which are essentially the advanced economy currencies, I should say, because we're talking about the pound, the euro, the yen, which make up a major component of the dollar index. And we are beginning to see a differential trend, at least in the near term, in the emerging market pairs, which actually is starting to weaken against the dollar. And this is something that I was thinking would happen from Jan-Feb on, that at some point of time you'll see a deviation in these trends. I did consider the potential that many of these currencies will continue to strengthen on the dollar when the dollar is falling, but recently the breakaway is giving me a sense that probably that's not the case, at least for now. So you might see a deviation between what the two sets of pairs do. So that's all in this update. I think I've pretty much covered a lot of ground on the macro, and in the index we'll be watching those two critical levels in the coming week, and I'll post out 2 more of those sentiment data points that have shown up in the last 2 days on Monday. That's all for me for this week. Thank you.